Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci method. In this webinar, I will be sharing with you extremely important details and advantage of trading Fibonacci, and most importantly, I look forward answering your questions about instruments of your choice. Please remember, very important US government required disclaimers. Never ever ever trade with risks you cannot afford. Never ever 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 trade without knowledge of the markets, Fibonacci of course. And remember, everything I do for education purposes. Please do share where is everybody from, as I always love to show you that the world is an incredibly small place and we all have something extremely powerful in common. Please post the city, country you are from. As I constantly travel the world, in the last few weeks I was in Hong Kong, I was in Bangkok, meeting with students and graduates of the course. Students are globally in US and abroad, and you can see pictures of the students under testimonies where you can listen and meet the students. Students who trade anything and everything from E-mini futures to stocks to Forex to options to ETFs. From Singapore to Thailand, from Florida to New York, students in US and abroad trading the method I will be sharing with you today. So, how in the world, love Cape Town, South Africa, very close to my heart, spend a lot of time there and have very strong connections. So, thank you for sharing. Thank you for showing to everyone that the world is extremely small place no matter where you are. No matter if you are in UK, in Australia, in Texas, in Malaysia, in Carolina, Arizona, Scottsdale, Atlanta, Cape Town, Maui. Incredible place to be. It's my joy and pleasure, traders, being here with you. So, how in the world did I start being fascinated with Fibonacci? Here's a couple very strong common sense points, as everything in life based on common sense. Collapse of 2008 shook my world. Collapse of 2008, stocks that had stunning earnings, stunning fundamentals, and indicators were telling you you are on the right side of the market, were crashing. Here's one of the examples of one of the stocks I was holding in 2008. Do you remember Chesapeake Energy? Chesapeake Energy was at 70. I was holding the stocks. I was listening to CNBC. I believed in fundamentals. Everybody was telling me to hold and hold and hold this stock. What in the world was happening? Stocks with stunning earnings and perfect fundamentals were crashing, and nothing was stopping them. In 2008, I was extremely fortunate to have nothing better to do but to question what in the world just happened, if there is more to the story. Until 2008, I spent time with Fibonacci, but I never devoted more than full time and years of studying price action and Fibonacci only. And I started seeing extremely clearly. Market is flawless Fibonacci puzzle. And this is what I will prove to you throughout this webinar. Market preset by Fibonacci levels. The only predictive natural mathematical sequence that present in everything that surrounds us. In nature and in the markets. And that's the first strategy I developed in 2008 that remains the core of everything I do, everything I teach. Everything you will see next applies to any instrument and any time frame. Why in the world would that be? Simple. If you look on any chart, what does this chart has in common? Take a look. This is the price. If you ever found instrument or strategy that works, it should apply to any instrument and any time frame. What instrument is this? Why would that matter? This is price action. This is S&P. Let me change the name of this instrument. Let's see if something will change. Price will remain the same. It doesn't matter what you trade. If you understand that mastering this is the core, if you understand that price action is the key to everything in the market, and if you unblock your vision after this webinar, my mission is accomplished. Because every single indicator on the planet is artificial, delayed, and developed mimicking this. When in fact, if you remove every single indicator from the chart, if you just devote time and effort to price action, you'll be amazed how much you will see. And that's what I've done in 2008. And that's what I do each and every day. 8 years devoted to Fibonacci. And that's what I share with you in this webinar. And this is what I teach every day to traders from beginner to hedge fund trader. As this is the key to the market. And every single one of these turning points is preset by Fibonacci levels. So what instrument is this? Previous was S&P. Pick your guess, please. Why would that matter? No one has a clue. But everyone knows. This is price. This is what every single instrument has in common. This is oil. I will bring up the chart on oil next. So you will see none of this is random. Every single one of the reversal points preset by Fibonacci. Every single price structure applies to any instrument and any time frame. Every single formula that plays out in the market identical to any chart from minute to week to month to yearly chart. No software, no indicators of any kind. Every single structure rule-based. Every single trade based on price for entry, Fibonacci for exits. Fibonacci levels apply to any instrument, any time frame, any platform. It is not software. Here's a couple of examples. As next you will receive invitation to the trading room. In the trading room I demonstrate the method with every single one of these levels plotted in front of you far in advance. This is day trading hourly chart that we use for our points of entry on 1, 2, 3, 5 minutes and higher. This is the levels that had been present in the trading room since May 8th. This is proprietary Fibonacci levels that tells you this is reversal zone. If you ever acquire position into this level, if you ever acquire long, success is not possible. Does it look familiar where market crash had started yesterday? Did you see this? Did you monitor for short? We identified this level weeks in advance. What was the problem yesterday in the market? As you see, every single one of these levels, based on the rules, and every single one of these levels show you never ever 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 short into reversal zone. This morning, first time since the month of March, institutional support had been broken, not without pain, not without struggle. But sell-off started here. This is what market all about, the start of the trend. And if you understand and respect that, you can trade any instrument, any time frame. Here's an example of one of my favorite charts. 2015, I was writing a number of articles in hedge fund world about Valiant. If you are well educated about financial markets, you know extremely well what's been happening with Valiant. You know extremely well the top hedge funds in US been buying Valiant left and right. The problem is they've been acquiring position very close to reversal zone. And this is what has happened with top hedge funds in US. As I love reminding my students, if they know Fibonacci levels, they trade better than top funds in US. Valiant collapsed 90% as I expected. I'm actually surprised Valiant's still breathing. So, Valiant had stunning earnings and perfect indicators at reversal zone. It is not S&P hourly. However, this is identical strategy. Because the only difference between the two, I removed the time frame. I changed it from hourly to yearly, which yearly has a lot less noise. As every time I work with hedge funds, as now we have hedge fund traders in the course, they use and hold positions long term. The only difference, as a day trader, you use short-term levels, you use hourly. Here is another example of one of my favorite events of 2016. Remember night of the election? Question: how many of you have shorted the markets night of the election because Trump won? This is what we were discussing in the course. Our bias remained firmly bullish, just like our bias remained firmly bearish since yesterday morning. It did not matter who won the election. The only thing that mattered, night of the election, price was at reversal zone. And you as a trader always choose trade with highest probability. Price reverses from Fibonacci reversal zone, proprietary Fibonacci rule-based level, 85% of the time. There was less than 15% of market collapse. And that's what separates knowledge from speculator. Did not matter if Trump won the election. Did not matter if Valiant had stunning earnings. Did not matter if oil came out with bullish news. Remember what happened on that fabulous April 12th? One of the most bullish news on record. My bias is bearish. Take a look on the blog, take a look on YouTube. Oil collapsed 1,000 points. Price comes to reversal zone, do not buy into. As we discussed this morning in the trading room, I do not care what the news is. This is the end of the minor trend. This is the most important resistance ever. That's exactly why it is such an annoying hot pink level, that you would never ignore this. Fibonacci drastically more accurate than news, fundamentals on indicators will ever be. If fundamentals and indicators worked, wouldn't everyone be Bill Gates? Wouldn't everyone be Warren Buffett? But we as human beings searching for easy shortcuts. Shortcuts do not exist. The only thing that constant is knowledge. Unblock the charts. You'll be amazed how much you see. This is what we paid attention to, this hot pink support. This is what we monitored since March. This is first time ever this level is out. However, market taking a pause here. What is a crucial Fibonacci resistance to the upside? This one. Can market dance in massive correction tomorrow morning? Absolutely. Do you want to short near this level? Absolutely not. Crucial Fibonacci resistance, the end of the minor trend, acting now as crucial Fibonacci support. And that's exactly why S&P pulled back at the close. No surprise. Level present in the trading room, 4 months. Fibonacci is golden ratio sequence discovered by Leonardo Pisano. It's present in everything. Look at everything that's natural. Why is everything so perfectly symmetrical? Exact same formula applies to price, no matter what you trade. So if you removed all the indicators from your charts and you start seeing something, no surprise. Price keeps repeating exact same patterns, exact same spirals, exact same triangles as present in nature, present in price, present in every single instrument. This is a golden ratio formula that forms market puzzle. As one of my favorite graduates named the markets Fibonacci chess game. This is the sequence, and this is Fibonacci numbers that matter. All the other numbers have no meaning whatsoever. The most important numbers always and forever will be the start of the trend. It is 0 and 1. It is 0 and 100. If you add 0 and 1, you will get subsequent number. If you continue adding these numbers, it creates the spiral. This is what creates symmetry in the market. And this remains the key to every market move. Market not a chaos. Market is Fibonacci puzzle. Price forms repetitive Fibonacci waves which can be capitalized upon in any market. So what separates and what's the difference between Fibonacci and indicators? Even if you come to the most basic chart, never forget, unless you're on a platform I've never heard of, Fibonacci never placed under indicators. Fibonacci always placed separately. You cannot schlep Fibonacci randomly on the chart. It will never work. You cannot schlep Fibonacci software on a chart not knowing where the stop, where the target is. It will not work. Knowing how to trade Fibonacci, knowing what separates Fibonacci from indicators, which are placed in entirely different section on any platform I ever came across, is a key. Fibonacci naturally predictive. Fibonacci give you your key targets in advance. No matter if you trade minute chart, no matter if you invest long term, if it's daily, monthly, weekly, if it's hourly chart. Indicators will never give you these levels in advance. Here's an example of a couple of charts outside of day trading charts. Here is very important chart on oil from this morning. This is day trading chart on oil, present since May 6th. Take a look. Since I came back, on May 8th, I said, be extremely careful with very hot, annoying, never to be ignored Fibonacci resistance. Price struggled at this level for 4 days. I said on May 8th, price heading to here. This is day trading levels. After price broke through the end of the minor trend, it's taken a pause decision point too. This morning we had a bullish news. All recorded on live video. I said, I do not care what the news is. The only thing you must pay attention to is word reversal zone. Entering into it, not an option. I don't care what the news is. Here is few other examples. This is oil monthly chart, present in trading room for the last 6 years. This is oil at reversal zone since 2015. Famous hot pink line. You understand extremely well as a knowledgeable Fibonacci trader. This is holding the key if you intend to hold your investment positions for months and years to come. Right now, bullish rally overextended. Bullish rally taking a major pause. If you're holding position for months and years to come, This level is the key. Until this level is out, oil will remain in pain, in massive correction. If you understand that every single chart connects to the previous chart, take a look. Is this random? Why in the world is price taking a pause here? It is not random. Weekly chart is my favorite chart. Weekly chart is a chart I use when I work with hedge funds. Bullish rally reached the end of the minor trend. Bullish rally that started in 2016 reached hot pink resistance. This level had not been broken. Price been struggling at this level for over a year. Both trends are minor. This is a dance on oil. 55 holding the key because it's the end of the minor trend on weekly. 55 is out. Oil will skyrocket to 59. And 67. Until then, this is a brick wall. Until then, this is what not letting price through into monthly. You don't have to wait for months and years to see the accuracy of the method. I demonstrate that accuracy each and every day in the trading room. And that's what we see each and every day in action on 5-minute chart. We don't have to wait for monthly and weekly. No indicator on the planet will give you these levels weeks, months, minutes, and hours in advance. Fibonacci is a mathematical sequence. You can plot Fibonacci on any platform as long as it has Fibonacci tool. Indicators, you are stuck to that particular platform, to that particular instrument. If you ever found indicators that works on that particular instrument, you better ask a very good question. Why? Price the same. If indicator works, it should work on any instrument. The only difference between instruments is liquidity and volatility. But price remains the same. Fibonacci can be used on any platform. With indicators, use stock on timeframes, platforms, and fees. Fibonacci stays with you forever. Knowledge of price action will never leave you. Each and every day, if you unblocked your vision, if this is what you're paying attention to, you'll be amazed how much you can see. In the last 6 years, I work with traders who never pushed a button on their platform. What do I learn from complete beginner traders? Why do they become so easily knowledgeable about Fibonacci? They have no baggage. They have no bad habits. They're not addicted to something that's blocking their vision. Psychology is 80% of your success. Only 20% skill. Getting rid of indicator addiction remains the key. And that's the number one thing I asked of every trader who comes to the course. This is what I start with. If indicators make you money, why in the world are you here? Stick with indicators. If you are here, remove the indicators. Start paying attention to what indicators developed after. And that remains the key. Indicators will never give you future. Indicators look good after the fact. As every single time I work with software developer or programmer, they ask me question about price. Because price holding the key to every single indicator that's ever been developed. Here's a chart of one of the traders who'd been trying for over 20 years, spending over $400,000 on indicators. So when I look at this chart, when I start working with you in private mentoring, I ask you a question. Show me what you've done before. Show me what you invested your time into. Price nowhere to be found. Price completely blocked by flashy red, green arrows. Looks like a fun video game to me, but gives you no knowledge of the markets whatsoever. gives you excellent knowledge of indicators, not the price. Fibonacci is a highly accurate predictive mathematical sequence that helps you identify your key profit targets on any time frame. Here's a chart of gold. This is a chart that's been present in the trading room for years. Remember gold in 2016? Remember bullish rally on gold from the trend inception until trend reversal? Price never touched to the key 1400. Never expected to touch to the key 1400. Word reversal in front of you, expect reversal. Fibonacci levels are always present. How to monitor for reversals remains the key. Price collapsed from reversal zone until taking a pause at the end of the minor trend for few months, back up to reversal zone. After this, price continued further down. This is where this year had started, at this crucial decision point too. Are you surprised where gold is struggling? Reversal zone. Levels present in front of you for years may remain in a play for the next few weeks, for the next few years. Rules are changed, levels are changed. And as you can see, last time price collapsed from decision point 2, found buyers at the end of the minor trend. And that remains constant. This is a dance price does each and every day, no matter what you trade. And this is something you can review going back here on YouTube channel. This is something you can review on the blog. Blog updated every week. YouTube channel updated few times per week. And that remains the key. Only Fibonacci can identify your exits in advance. Fibonacci retracement levels are key to the method. Every single level in front of you is proprietary Fibonacci levels that apply to any instrument and any time frame. Here's a few other examples. Here's an example on Apple. Again, chart present in front of the trading room for years. Do you remember Apple in 2015? Top holding by hedge funds in US at that time? And everyone is floored and shocked. What in the world is happening? Apple has stunning earnings. Apple should rally. Wouldn't life be magic if it was that easy? Apple collapsed despite stunning earnings. Apple collapsed 40%. And as I said, all hinges on this hot pink support. This remains the key. Apple rallied despite worst earnings in 13 years. Are you surprised what Apple is doing now? Do you know what to pay attention to? This is the key support on Apple. How to trade Apple? You must know the rules. Reversal zone in a play. Reversal zone gave you 8-week correction. Right now, Apple hinges on 146. Levels present in the room for years, in a play today. Do you know indicators that can do this? With this much accuracy? All documented, all posted on website, social forums, and my LinkedIn page. And that's all that matters. This is the levels that you can use on any instrument, any time frame. Knowing the rules, 2 entries, stops and targets is a key. So unblock your vision, pay attention to the price, apply Fibonacci levels, and you'll be amazed how your trading and investment decisions will improve. So this is what I was teaching this morning in our group classes, and this is what I'm teaching this afternoon in private mentoring. This is according to the markets traders. If this looks like a foreign formula, You have a lot to learn because without this, market structure does not exist. This is how simple markets are. Markets keep repeating 5-wave Fibonacci structure if trend is major. If trend is minor, market moves in 3-wave formations. We always have minor trend, we not always have major trend. Reminder, we're dealing with minor trend on oil weekly. Minor trend is always present. Major trend on oil weekly is not present. Hot pink line in a play all the time. Hot pink line in a play on euro last few years. Here's a chart of euro from 2015. Here is crucial Fibonacci support. Chart from 2015. I said one is holding the key. Bearish trend is minor on monthly. But remember, euro on weekly. Remember 2014? Euro blasted through this hot pink level after 2 months. Exact same reversal zone as right now in a play on S&P. But euro respected 1 for the last 2 years. Never ever short near. If we're gonna have euro exit, euro will crash and burn to 80 and 50, which is exactly what pound done. Which is exactly what happens every time when you have such a powerful news. Remember hot pink line on pound? Remember pound on 36? We Americans not gonna be poor for too long. Pound collapsed from 2100, already reached 119. Everybody is seeing this? Euro holding 1. No euro exit. Cannot wait to see what will happen with German election. We love news due to volatility. I had no clue about Brexit in 2015. None. So if you respect the end of the minor trend, you respect the end of wave 3. You never trade against the trend. You never trade wave 2, wave 4. As an eligible trader, you buy a trend inception. You never, ever, ever acquire position between wave 3 and wave 5. If you do, your success rate drops to 15%. You are entering into trend reversal levels. And that's exact same thing Aikman done when he bought Valiant. And that's exact same thing that happens on gold if you buying gold into this level. This is gold monthly. This is a brick wall. End of minor trend. That gold had not been able to break in years. This is crucial monthly support. If you're holding position for years and months to come, knowing where to enter, knowing where your stop is a key. And that is constant. Doesn't matter if it's 5-minute Nasdaq, doesn't matter if it's 3-minute oil, doesn't matter if it's 4-hour euro. This formula remains constant. This is the basics of market structure. And this is what price does on Nasdaq. 5-way cleanest price action pattern I've ever seen. This is what price does on euro hourly, reversing in exact same fashion as Nasdaq had done. This is what price does each and every day on oil. One of the most volatile instruments respects Fibonacci levels. Identical formula on Google. One of the cleanest charts ever. Market will never be cleaner and more pure than this. And that's what I teach each and every day. Since 2011, I taught traders from beginner to hedge fund trader, trading proprietary Fibonacci levels, proprietary Fibonacci strategies I developed in 2008. My favorite part of the website when you come to the website is not just meeting with students in US and globally, but it's also what students have to say about course. If you click on the orange section on the website, you can listen to the graduates. Students come and attend bootcamp time and time again, which is always my favorite event of the year. We have very close community of traders in US and abroad. We meet all the time, and this is my favorite event of the year, Fibonacci Trading Bootcamp. In the last 6 years, this is bootcamp number 11. On average, I do a couple of bootcamps per year. This year, bootcamp is in summer. Bootcamp is part of Fibonacci course, Fibonacci Mastery Course, everything under Learn. Bootcamp, each and every day, June 12th through 23rd, part of 8-week group session or 16 weeks private mentoring. Graduates of the course paying extra to join in the bootcamp. New students are not paying anything extra. Savings of $888. You receive 2 additional weeks of education in the course. Every single day, intense education. Most students who do the bootcamp finish course in 2 weeks. In the bootcamp, you also learn additional strategy that's not part of regular course. All posted on the website. If you would like to join us, I highly encourage you, please review the information on the website and never hesitate to ask me or contact me after reviewing the information. The information posted, info@fibinstitute.com or 925-257-4298. We go with the flow. We meet every single morning, Monday through Friday. The other 6 weeks in group sessions, or the other 14 weeks in private mentoring, scheduled drastically less intense. Even if you can attend a couple of days of a bootcamp, you will benefit tremendously. Ladies and gentlemen, if you have any questions, pretty please do ask. Pretty please post the questions about the instrument of your choice and time frame of your choice. The very first question this morning was about NASDAQ. I will greatly appreciate if you let me know what time frame on NASDAQ. Are we speaking about weekly? Are we speaking about monthly or hourly charts? No surprise? Historical highs. All hinges at this institutional support. S&P is not at reversal zone. S&P overextended bullish rally. NASDAQ is drastically closer. And that remains the key. Absolutely. Yes, Jerry. Institutional levels holding the key. This is crucial. Trade with institutions, not against them. This was powerful reminder of this institutional resistance. NASDAQ very close to reversal zone. NASDAQ is front runner. You know the rules? You know how to apply the levels? You understand that market moves in 5-way Fibonacci structure? You understand it is all about trend inception? I hope you understand how important this moment is on NASDAQ. What is the key Fibonacci support on a NASDAQ? What is the institutional support you need to monitor? Is this one. This is the key. This support is out, market in free fall. This support respected, this is your range on NASDAQ. This is institutional chart. This is my favorite chart of all times. It has no noise, it has no junk, it has absolutely no fluff. It only has meaning. It only has serious volume. This is pretty impressive sell-off. Market structure drastically changed in one day. This is extremely important week on Nasdaq and S&P. All hinges at this support. This support is out. We're dealing with institutional sell-off. And that remains the key. Reversal zone is reached on Nasdaq weekly. And that's what price does every time. Doesn't matter if it's Valiant, doesn't matter if it's oil, doesn't matter what you trade. This is a chart that I start long-term Fibonacci class every Friday. We go back to 2003 as I show you how you could have benefited from Fibonacci in 2008. This is where bullish rally came from. This is a chart present in the room since 2011. This was crucial Fibonacci support in 2014, 2015, 2016, famous 1800 number. This level was respected. This is massive correction on S&P monthly. What is the crucial support on monthly? This level, traders. This level in front of you right now. Knowing where the meaning in the market is, holding the key. Speculation will never work. Chart present in the room, last 6 years. Larger the chart, bigger the volume. Volume in front of you. This is oil, David. On Ninja Trader, it's CL. This is oil. This is institutional weekly chart that we had gone over a few times. This is institutional resistance chart present in the room for years. This resistance is out, oil will skyrocket to 59. Entering into this hot pink resistance, not an option. So it's extremely important to understand that futures have different symbols on different platforms. We looked throughout webinar on oil chart, we looked on oil weekly, we looked on day trading chart, hourly. This is oil future hourly resistance. Has exact same strategy as institutional weekly chart. No matter what you trade, if you trade 3-minute chart, if you trade 5-minute chart, you never ever short near reversal zone. Success is not possible if you do. Identical levels, very different strategy than what you saw on long-term charts. But even if you trade 3-minute chart, you always have these levels in advance. If you can day trade, you can manage long-term investments with drastically more ease. I constantly encourage students to be self-aware, to realize that psychology and self-awareness holding the key to your success. Understanding if you're disciplined, if you're humbled, if you're extremely patient trader, holding the key to identify if you can day trade or not. If you're a day trader, you're a gem hunter. You know when to trade, you know when to walk away from the screen. You understand that spending more than 2 hours in front of the screen not an option. And that's holding the key. Price at reversal zone, you walk away. You do not short. Ever. If you do, success rate drops to 15%. And that's what S&P had done for hours until trading room close. This is what we dealt with. And that's something you don't have to wait for weeks or months to see the accuracy of the method. You see it instantly. And that's S&P 3-minute chart. Any other questions, traders? Please to ask. Here's Euro chart again from 2014. Here's reversal zone on Euro. Exact same level as you saw on S&P 3-minute chart, as you saw on oil hourly, on gold weekly, monthly, on Apple weekly. No matter what you trade, formula remains the same. This is where euro collapsed from. Do you remember euro at 38? And this is where euro is sitting for the last 2 years, at this Fibonacci support. This support is respected. Do not short near. This is a brick wall. Exact same crucial support as ultimate resistance remains on oil. As exact same support on Apple. Is euro gonna skyrocket like Apple done? Highly possible. All hinges on one. On Apple, everything was hinging on 94 support. Identical formula, identical strategy. Walking down memory lane, here's a chart on US dollar Japanese yen hourly chart from 2014, day trading chart. Price respected reversal zone just like S&P 3-minute chart had done for hours, and that's where buyers stepped in from. Identical formula. Question about Aussie dollar. Here's Aussie dollar, here's a reversal zone at the start of May. So here's a very powerful reminder, you cannot short randomly. Why in the world is this happening? Is there a very good reason why buyers stepped in here? Absolutely. This is the end of the bearish trend. Let's take a look why buyers stepped in here. So this is where price collapsed to on May 9th, and this is where powerful bullish rally stepped in. So what in the world is Aussie dollar doing right now? So we identified why in the world Aussie dollar collapsed. And right now we identified why in the world Aussie dollar taking a massive pause here, because Fibonacci reversal zone is present. So let's take a look on Aussie dollar today, and let's take a look what to expect on Aussie dollar now. So here's Aussie dollar. We're dealing with overextended bullish rally. Price is not far off from reversal zone. As you learn in the course, where's the worst place to be? Overextended bullish rally. If you're trading Forex, please remember to add the spread. Bullish rally is exhausted, and if you think you're buying spectacular bullish rally, you're in for a pickle. Not the place to enter. By the time you come anywhere near this level, you must be in profit. This is crucial Fibonacci support. This is where price bounced from last few hours. Shorts, not an option. Price can crawl up a little bit higher, but you never acquire position near this level. If you do, your success rate drops to 15%. So keep me posted what Aussie dollar does when it will crawl up a little bit higher. I would love to see. And that's what price does every time. Price struggled immensely at decision point 1 for days. No surprise. End of minor trend. Level you can never ever buy near. Taking 3 weeks to break through this level. Last question. Swiss dollar. We have a lot of Forex traders. My pleasure. USD CHF in free fall. Look at that. So let's walk again. What time frame, Ronnie? What time frame, please? USD CHF hourly or weekly? Day. Okay. If you're trading long term, you don't want to use word day on your chart. So let me take a look on US dollar weekly. You want to trade with institutions? You want to pay attention to weekly. Look at this war zone. Ouch. No one had asked me about Swiss in forever. So this is a very powerful reminder. Please take a look on this chart and remember, making assumption that price will always go to reversal zone is not correct. Remember what I said, if you're buying into the end of the Wave 3, it's not an option. Here is a reminder. In the course you learned that the most important target is decision point 2. So please take a look what happened to the upside on Swiss dollar. War zone at decision point 1. Price struggled at this level for months. Came to decision point 2, brick wall. What are we expecting right now on USD CHF? I would like to remind you how much price struggled at this level. Do you see that? How many months did it respect this Fibonacci support? Many. What are we expecting next? Let's take a look. This is where the price is heading to next. 955. Again, knowing where to enter, knowing where to place your stop and target remains the key. This is holding the key to Swiss franc. Response at this support. This is your range. This is the key. Next. This is where price struggled entire 2016. Shorts near this level, not an option. Success rate less than 15%. Just pay attention to what happened on the previous support. 6 months war zone. Expect the same next. My pleasure. So ladies and gentlemen, if you don't have any other questions, please prepare one more question. What is F? Facebook? Ford. I'm sorry, Facebook is FB. I've been extremely busy today. So, Ford weekly. Let's take a look. Ford is here. Fun on Ford. Poor Ford. Take a look. Ladies and gentlemen, this is where collapse on Ford had started. This is the levels on Ford, and this is where sell-off had started. And this is where Ford is now. Take a look. If you remember, you were at 38. This is Ford at 18. Ford was not able to break through the end of the minor trend. This is support on Ford right now. This support is out. Ford is heading to 9. Shorting randomly, not an option. Right now, Ford is sitting at this support. This is your channel on Ford. Shorting its support, never an option. This support is out. Ford is heading here. This is crucial Fibonacci support. This is where Ford bounced from in 2015, 2016, multiple times. This is where Ford is today. Exact same Fibonacci resistance you saw on previous instrument. Next question about DAX, the beast of the indices. As you can listen on the website, graduates of the course, Trading DAX. If you're trading DAX, you're one of a kind. One of my favorite graduates that came to visit me in California, trading DAX. So let me get the data feed on DAX. Give me a moment. So here's institutional chart on DAX, and here's very powerful reminder. Unlike S&Ps, it still has space to reversal zone, and unlike NQs that already reached reversal zone, this was crucial Fibonacci resistance. Taken DAX many months to break through. DAX at reversal zone, traders. What is holding the key on DAX? This support. This is everything on DAX. Shorts into the support, not an option. This support is out. Selling pressure is pretty powerful. Shorting into the support, not an option. Previously, it was crucial Fibonacci resistance, taking DAX weeks to break through. Last question I receive, US dollar yen daily coming up. So if you understand what institutional charts are, if you understand what institutional volume is, you simply trade with institutions. Nothing less, nothing more. So we're getting a lot of reversal levels, traders, on long-term institutional chart. So here's US dollar. This is where we are. Looks familiar? Dollar yen. And that's all that matters. Reversal zone is present. Never acquired trend position will never work. So this is a key to the downside. Buying into reversal zone will never work. So hot pink level is everything on this chart, but first things are first, 1 on 950 is institutional support on US dollar yen. So thank you, traders. I'm forever grateful for your time. If you would like to join us, I promise you, with students we have a ball. You will see after one class that using anything other than Fibonacci is the waste of time. Institutional data in front of you, it's a weekly and monthly charts. Long-term charts holding institutional volume. So, if you would like to join us, I highly encourage you, please review the information on the website, and I look forward to seeing you in the class. All you have to do is simply sign up online, and pretty please do monitor your inbox and just in case spam box early next week for trading room invitation. Typically the busiest day of the week is Tuesday. So you will receive few other emails with videos and newsletters and trading room invitation next Tuesday morning. Thank you, Rani. Thank you, David. Thank you, Robert. Thank you, John. Thank you, Vanessa. Thank you, thank you, thank you, everyone. My joy and pleasure being with you. Look forward to hearing from you. Thank you so much. Bye-bye.